Hey guys, welcome to Stock Talk. Today, we're going to talk about 3 different penny stocks that I think provide really interesting opportunities that every investor should be aware of, and look into if you're trying to find companies early and get in on the ground floor before they explode. In this video, we're going to revisit LexaGene, stock ticker LXXGF, and see what's new since the last video we put out talking about the over-the-counter healthcare stock. The second one will be USWS Services, also known by its ticker USWS, and analyze it as an investment opportunity. And finally, we'll bring a new big opportunity, GTEC Holdings, a cannabis company that promises to be an interesting opportunity for those trying to break into the legal weed market without paying too high a stock price. Let's get right into it. Remember to like and subscribe to learn more about stocks. Also, let's hear your opinion in the comments down below. Alright guys, first we're going to touch briefly upon LexaGene and see where the stock is at. Basically, as of writing this video, LexaGene is at 86 cents a share, which is, despite a very rocky road in between, not far off from where it was 6 months ago. This makes sense because there's not that much recent news about LexaGene other than what I spoke about in the last video. Namely, that it received a huge influx of capital from the exercise of warrants, which is an incredibly good sign for a company, and that it made some changes in its board and its MyQ lab successfully detected UK and South African COVID variants. All of those news stories are objectively good, and they were accompanied by big moves up for this tiny penny stock. So the update when it comes to LexaGene is that I'd say it's a hold. If you bought LexaGene already, I don't think now's a good time to sell. Just because the stock is slightly down over the past month and stagnating over a much shorter prior time frame, don't be freaked out. That's only because of a lack of recent news regarding the company. All the investor hype LexaGene got was deserved when it got it, and the company's stock will probably be up and roaring again as soon as any news comes out, which it's likely to. As COVID vaccines continue their impressive stateside rollout, more and more vets will open back up, people will bring in their pets for long overdue appointments, and sales of the MyQ lab will likely spike when they do. Now, let's shift gears and focus on the USWS Services, or USWS. As the name suggests, USWS is an oil and gas company, but according to their site, they aim to lead the industry in fully electric well stimulation innovation, in an attempt to reduce the emissions associated with traditional hydraulic fracturing, or fracking. Despite the fact that the USWS just recently came out with a subpar Q4 earnings report, reporting losses of 39 cents a share versus the 16 cents a share that some economists predicted. That sounds bad, and the stock did react accordingly, but personally, I think there's still a lot to love about this company. First of all, saying that a company lost revenue in 2020, especially in the oil and gas sector, is nothing out of the norm. The lockdowns imposed to help fight the spread of COVID-19 took a toll on literally the entire world's ability to drive, fly, in other words, consume oil and gas. If you look at the more micro level to see what actually happened within 2020, you can see that the USWS suffered at first but quickly began to bounce back. They averaged 5.3 fully utilized fleets for Q4 2020 compared with the 4.2 for Q3 of 2020. They also reached agreements with key customers to provide electric fracking services with 3 all-electric fracking fleets. What's more, USWS still has $14 million in liquidity, meaning that they have enough to help ride out the rest of the pandemic, which is looking like it will hopefully be less of a worry by later this year, as many cities and a lot of travel is already opening back up. I think USWS providing an electric solution to help assuage a large part of fracking's environmental impact, especially with the Biden administration's goal to support any and all new technology that will help combat climate change, is a prime position to benefit as soon as the pandemic eases out later this year. Finally, we'll look at GTEC Holdings. Ltd. GTEC Holdings, known by its stock ticker GGTTF, is a cannabis company with a lot to love if you're an investor trying to break in. It's a huge opportunity. First of all, GTEC Holdings has had an incredible month so far. The first week of March alone, the stock surged 25%, bringing its 6-week total gains at the time to 650%, on news that it paid off the unsecured convertible promissory note that it owed it to a company called Invictus MD Strategies Corp. A promissory note, as is evident by its name, is a note, a promise that the bearer of the note will pay back a certain amount of money over a certain number of payments and a certain time frame to the issuer of the note. Whenever a company gets rid of a massive debt burden like that, it looks great to investors because it means that in the absence of interest or principal payments, the company can use more of its capital to inflow to fund operations, expansion, new capital, etc. Shortly after this announcement, GTEC Holdings also announced that it made its first international sale. GTEC Holdings, a Canadian pot company known for its handcrafted cannabis products, found a buyer in Israel and agreed to send a minimum of 500 kilograms of pot there annually, thus officially entering the global cannabis market. GTEC doesn't own as much cannabis as its fellow Canadian competitor, Apriel, but if it can get a jump on selling to the international cannabis community and making itself known on the world stage before other companies like Apriel or Planet 13, then it's in a fantastic position as more countries move closer to fully legalizing pot. Then, on March 10th, GTEC announced that it had entered a bought deal offering with Desjardins Capital Markets, where Desjardins would buy nearly 19 million shares of GTEC for $15 million, although this number was later revised upwards to 20 million. By way of explanation, a bought deal offering is when a financial institution offers to buy all of the publicly traded company's outstanding shares. This is a huge boon for that company's stock price when it happens for two main reasons. First of all, it looks good to investors and raises demand for that company's stock because it means that the company will have a huge influx of cash as a result of the deal. Second of all, the law of supply and demand. In a super simplified way, one can describe the law of supply and demand by saying that if there are more buyers than sellers, the price of a good will go up, and if there are more sellers than buyers, the price will go down. This is because the free market will try to clear an item, that is, to find a buyer for every seller and a seller for every buyer. Therefore, if a bought deal offering takes place, the financial institution performing the bought deal offering represents a giant buyer, and will therefore drive up the stock price for the company on the receiving end of the deal. As expected then, this announcement alone sent GGTTF shares soaring, as high as 23% over just the next 4 days. This bought deal will obviously get GTEC quite a bit of capital at a time when it really seems to be on the cusp of expanding quite nicely. So guys, that was a brief overview of these 3 penny stocks and where they currently stand. Obviously, since they're penny stocks, there are certain elevated risks involved, but I feel strongly that the 3 penny stocks I analyzed here are good bets. But what do you guys think? Are these stocks bulls or bears? Let me know what you think in the comments down below. If you like what you saw, remember to smash that like button, and subscribe and turn on notifications so you don't miss more videos. And I'll see you in the next video.